are coming out as claiming to be Forex traders, whereas we've never even seen them analyze the markets. Now, I want to take you through a very simple session. Mike, ni mark pen gani na wak?
Yeah, black.
Black. Now, over so many times, you get people asking about strategy. Yeah? So this is something that I'll cover, how to come up with your own strategy. I'll also cover when to buy, when to sell. Forgive me for my handwriting, I was not going to write. Maybe I was going to type. Alright, so, and also we do market analysis. So kwa hii market analysis sasa ndio tunachambua when to buy and when to sell. So, now before I even jump to market analysis and everything that I have to show you there, guys, I want to take you through the MT5. So this is what we call the MT5 basically. So MT5 is the software now that gives you access to the market. As you can see here, we have currencies that Euro USD, GBP USD. These are the currencies that I pick, that I chose to trade. For me, I trade these and only these, nothing else. And there is no any other pair that I'm analyzing. Hata leo ukiniuliza gold iko wapi, like ukiniamsha saa 9 usiku, I'll tell you where gold is. When you ask me about Nasdaq, when you ask me about US30, when you ask me about Euro USD, I'll tell you where that market is. So that is what I trade. Now, whatever you can see red and blue here is the candlestick patterns. And candlestick patterns always are giving us a story. So for instance, the red ones, they are the sellers in the market. This is now the price action. They represent the price action in the market. So the red things that you can see, these only are sellers. So it means the market is going down. When you see the blue ones or green, it means these are the buyers. The market is going up. Now, pips. See, tumesoma pips. For instance, the market moves from here, USD card, this is 1 hour time frame, moves from here to here. So, how you can measure pips, there is this crosshair that is here. Unaona hiyo kakitu yenye nasongesha hapa, nimekatoa hapa. So, you can measure pips directly. You don't have to do mathematics mingi. This software is very simple. So, if you can see here, it reads 10 bars, and these 379 points basically means 37 pips. Sawa. So this is how you can measure your pips. Now, hapa pia tuko na kitu ingine inaitwa time frame. Very important. So, for instance, right now I'm on a selection of 1 hour. So it means every candlestick that you can see here, it has taken 1 hour to form. Sawa. Kama sahi I'm quite sure sasa 4 p.m. imefika. So a new candlestick will open 4 p.m. and close at 5 p.m. Sawa. So, if I go to the 4 hour time frame, again, it means that every candlestick takes 4 hours to open and to close. Sawa. So, in a day we'll have, in 24 hours, or which is 1 day, we'll have only 6 candlesticks. Sawa. Then, when you go to the daily, the same. So, easy tunaitanga time frame. So, always make sure that you select the right time frame for you. So, we have until the 1 minute, as going down to the 1 minute. Now, here again, we have some other tools, but I want to show you these technical tools that you can use to make the market analysis. So, for instance, we have the horizontal lines. We use them to draw support and resistance. So, support is when the market comes to an area level and it is finding difficulty to break. And resistance is the other way around. When the market is moving up and finding a place where it's difficult to break, inaitwa resistance. So support is opposite of resistance. So for instance, if the market is moving up and finds a level, this will be a resistance. And if the market is bouncing on a level on the downside, this is called what we call support. Now, when doing technical analysis, this is one of the tools that you use, that is the horizontal lines, which we usually use to identify the support and resistance areas. Now, kuna kitu ingine yenye Mike alisema indicators. So you can also find the indicators here. So if you get hapo kwa insert, you'll find the indicators ni mingi. So there are some trend indicators. There is the moving averages. I use mostly the moving average myself. There are some other indicators mingi sana, parabolic, standard deviation. There are so many indicators. Kuna indicators za oscillators category. hizo zinakuanga hapa. There is the volume, there is the stochastic, there is the RSI, kunazo za Bill Williams, zingine hata sijaitumia. But as a beginner, I found myself like having, you know, there are some people when mtu akianza forex anafikirianga the more indicators that you have, the more sharpshooter you become in forex trading, but it's the other way around. The more indicators that you have in your chart, the more actually you mess your trading journey. So focus on just 1 or 2 indicators, then they should also be indicators that are adding value on your charts. For instance, I'll show you a very simple indicator, which is the 50 moving average. So for instance, if you check the price against the 50 moving average, you'll find that each and every time price comes to the moving average, the market will bounce from that place. So the market comes to the moving average, and for instance the 50 EMA, and at that point we have something like the resistance, then the market will bounce from that zone. See, nimewapea strategy. Bazu, see, nimewapea strategy. Yeah, nimewapea strategy because if the market is going up, look for have the 50 moving average in place. Look for a place where the market has given what? A support. And then hapo hivyo tena look at something that we call the candlesticks. Now for the candlestick, look for number 1, a rejection candlestick, and then look for a momentum candlestick. Hii sasa ni advanced kidogo. Look for rejection on this level and what? Momentum. Momentum shows that price is continuing in an uptrend. As in the bulls are taking over or the buyers are taking over. Mwenishika? Nimeshapeana strategy already. Mimi naendanga mbio hivyo. So I think vile tumetoka hapa nimeshawapea strategy moja, so somebody should not complain that watu online wanasema aje, somebody should not complain that Jeria anasema tupeleke pole pole. Si mmesema niwapeleke mbio ndio tumalize hii maneno, because if I take you slowly tutaishi hapa. So basically that is the MT5. Nimeshawaonyesha how to do the market analysis jaingia, but nimewapea a tip of the strategy. So a strategy is created by number 1, something that we call conditions. So for conditions, you are looking for the market when the market is in an uptrend ama in a downtrend. So let's look at how to come up with a strategy. So look for conditions. Number 1. Yes. So for conditions tunasema, is the market in an uptrend or in a downtrend? Now, for instance, in this market, when the market is going down, is in a downtrend. When the market is going up, is in an uptrend. Now, we are using a simple 50 EMA to identify when the market is below, when the candlesticks are below the 50 EMA. It means that the market is in a downtrend. So that is a condition. The market is in a downtrend. Now, the second thing that you should have to have a forex strategy is something that we call what? The entry. The entry criteria. Condition ingine pia, uptrend, downtrend, pia heka hapa, support ama resistance. Si nimesema, because the market is moving heavy, and we have the 50 EMA, we should also have either a support or resistance. So eka pia support or resistance as part of the condition. Now, entry. How do you identify the entry? You wait for the market to come to an area of value. Semeni area of value. So the area of value is that support or resistance, that 50 EMA, that supply or demand level, FVG, which they call the fair value gap kwa watu SMC ama ICT concepts, kitu kama hiyo. So now entry again, weka hapo candlestick price action ambayo ni look for rejection candlestick, then momentum. Look for rejection on that level or momentum. Here, where the market is pulling back to the area of value, look for rejection, then momentum. Then the exit. Condition, entry na exit. For exit now, what is your stop loss and what is your take profit? So what is your stop entry? Tushapata stop loss yako unaweka wapi? Above or below the newly created what? Swing. Below or above the swing? That is where you place your stop loss. Below or above the swing. And the take profit either on the next key level. Sindio, si tumesha angalia kuchora support and resistance. So you look at the next key level where the market is most likely to find a support. If it's going in an uptrend where the market is most likely to find a resistance. So that should be where you get your take profit. And this take profit should be also something that has Mike amesema inaitwa risk reward ratio. So if you risk 20 pips, make sure your take profit, which is the stop loss, make sure your take profit is 2 times of this one. So 2 or 3, at least 2 times. Yes, that is what now you will be able to achieve a good risk reward ratio. So kama umeweka stop loss 20 pips, the swing is let's say for instance this one. Tuseme kama hapa, wacha tuifanye practically, sawa? So for instance, the market has come around this place and we are looking to make an entry. So we want to get our stop loss, maybe it's this is H4. Let me go down to H1. So for instance, the market here has come, tuseme kama place kama hapa. So and I've already identified rejection and momentum, and I want to get a stop loss of 16 pips. Then it means my take profit should not be less than 32 pips. It can be more. The more the RR, the better, because you don't have to worry about something that you call the win rate. Now, tumesha strategy tumemaliza. I hope Jerry will be with us. I've already covered there. Now, let me show you sample of trades. So, let me show you some sample of trades that I've taken for the week, and also let's look at some of the trades that are running currently. I think I have Euro USD. Now today is on Friday, because on Friday the market tends to, to slow down. So as you can see, these are trades that I have. So the market is in a downtrend, and whenever the market is in a downtrend, I want to be a seller. Sawa. At no given point, when the market is in a downtrend, I want to be buying. So this is Euro USD, the market is in a downtrend. So anytime the market is creating a new swing, I want to make sure that I'm shorting that market. And the take profit, if you look at this take profit, I've already broken even for this trade, because Friday the market is slowed down. But the take profit should also be 2 times at any given time. The take profit should be 2 times the stop loss. As you can see, these are trades that are still running. We still have some few hours until midnight. Your trades zifunge. But you can see we have $95, $94, $95. Actually, it was $140. But the market keeps on, as market goes, market is in a pullback, come up. So, but you should not close your trades. Always be patient until it's either there are 3 things that happen when you have trades running. So either your trade igonge stop loss, sawa? Your stop loss is taken out. Or number 2, your take profit, sawa? The third one should be either you break even. There's no any other option. And now this stop loss also should not eat away the whole of your account. That is what we'll be learning about risk management. For instance, I'll show you a trade that is not doing so well, which is probably on. Let's look at US30. US30 is on a negative, and if you check here, these trades. It was on a positive zone, but right now I was selling. But right now the market is still nachezea hapo tu. But if you look at if this stop loss is taken out, I have 2 positions which are equal. I think they are totaling to $50. So these account of $10,000. So it therefore means that my risk management plan is for this position is 0.5%. Maximum 1%. I'll not take a risk for every single trade. So it means that if you have $10,000, so, and you're risking 1%, how many dollars are you supposed to lose as a trader if that trade goes against you? Hesabu ya mbio $100, sawa? But if you, anytime that you make profit or your take profit is hit, so how much are you supposed to make? At least risking 1 is to 2, 200. If you risk 1 is to 3, 300. Therefore, it means that if you win 50% of the time, assuming you win 50% of the time win rate, you have a strategy that has a 50% win rate, so, and assuming in a month, Esther, you have 20 trades, so if you're winning 50% of the time, nataka nikulete class kidogo, naona unafikiria mabiashara mingi biashara huko tutapiga, wacha tumalize lesson kwanza. So 20 trades, sawa, and you have a 50% win rate, so it means you, how many trades do you win out of the 20? 10. Anasema ntemenya lakini ni 10, so it means you win 10, you lose 10, sawa. Every time you're winning 200, sawa. Sawa? Sindio? So you win 10 trades. So how much do you make in total? Now, every time you're losing also, you're losing 100. You lose how many trades in that month?
10.
So this is negative, eh? Negative $1,000. Sindio, total hapo, sindio? So what is the net? Now, that is how Forex trading works. And this mathematical concept is what differentiates Forex trading and gambling. In gambling, once you put in your stake, it goes your way. Same as binary. So, but in Forex trading, when you have this all figured out, when you have a good strategy, when you have proper risk management, when you have a proper psychology, then you are able to hack the market. Sawa. So,
I have a question. Can you take us through the pending orders, like the buy stock, the sell stock?
Hiyo sasa, hiyo ni link tutaipiga siku nyingine, but tunaweza extend tu kidogo, but I want to make sure that I answer all the questions zenye ziko hapo kidogo. People are asking questions, but what is not clear here, ama from what I've covered, what is not clear, so that I can answer it before we call it. As you can see, for this trade like GBPUSD, this is the long-term target. So for my analysis, I'll always do my analysis on TradingView, then I do my executions on MT4 or MT5. But you will see me annotating the charts like this on TradingView. It gives a better view on what we are expecting in the market. So this is what we call the analysis. Once you are good at the analysis, now you can be able to do whatever I have done there, because it's not hard. It just comes with time. Sawa. So, and that is also what we are doing for today, so that you can start pole pole. Sawa. Yeah, so maybe question, anyone who has a question, I've already shown you how to come up with a strategy. I've already given you a very simple strategy that you guys can go and practice and execute. It can make you money. There's no strategy that doesn't work. The problem is people are looking for a strategy which is working 100% of the time. They are looking for what you call the holy grail. The holy grail in the market is at least having a strategy that works 50% of the time. Then always make sure your risk management is also on point. Sawa. Yeah, so any question? We are almost ending the live. Watu wa TikTok pia live pia, you can ask questions. I'll answer them in the next 5 minutes, so that you can call it a day. So the next lesson, next week on Friday, we'll be covering supply and demand. I'll be the teacher on the screen in front of the camera here. So supply and demand is Mbona mnacheka? Supply and demand. That is what we'll be covering next week. So naambia watu wa TikTok live ndio wasipotee. Next week ni mimi na nyinyi. Supply and demand. It is more advanced concepts of forex trading. Forex trading is so huge. We cannot finish it in 2 hours. So for this session is only to give you at least some, you know, some skeleton of it, so that hiyo sasa hiyo mbuzi ukienda sasa uchinje wewe mwenyewe ile mingi. Na ukisikia pia hiyo mbuzi ni mzito sana, huwezi maliza kuchinja, why don't you enroll for our classes? Only 30,000. You learn for 1 month, you learn everything. We give you mpaka strategy. Si uko class? Yeah. Class inakupeleka aje? Saa zingine kwa hali ya pilipili na ndimu saa zingine iko tough, saa zingine iko soft. Lakini forex sasa inakuwa hivyo. So for the classes, those who are asking for about the advanced classes, I'm answering those mwenye ameuliza the classes, where the classes and how they are conducted. Now we have this online portal here that is here for you. I think my friend here has the logins. So this once you enroll to the class, this is what you get, the first one. Your first interaction is this one. So we have full modules of the classes from A to Z. Like, you know, kuanzia introduction. It's me who has recorded these videos. And if you go back to those videos, I recorded them during Corona time. So I think Corona is the idea. I sat down and made these modules, and I made it simple for everyone who wants to enroll for our classes can enroll them and learn at the comfort of their home. So isi course, Mike is always there also to support the students who are going on with their classes. So apart from the online module where you can sign in, start learning from the online modules, enjoying the content there. How's the content so far? The online modules, do you enjoy? Is it hard to navigate? Simple?
No.
Inakuwaga hivyo, so but you love it. So once you understand everything actually, and go back to the modules now it even makes more sense to you. Now another resource for you to learn for free is the YouTube channel. I usually drop one market analysis video every Sunday. There is a video that I drop, so you can go there, watch the market analysis, how I do it, so that you can learn one thing or two. For the classes is 30,000. So the name of the YouTube is this one, Aleks Vince and I. Please make sure to go and subscribe Apple and start watching the content. Now I think we've come to the end of the session, so I'll answer the last question. Tufungie hapo.